All right, let's turn your attention over to the crypto space, which has been impressing folks lately. Not necessarily today. Let's see what to make of it. And we bring in Ray Salmond, head of markets at Cointelegraph. Thank you so much for being with us. It was just 2 days ago, we were at 127,000 on Bitcoin. We're about almost 10,000 lower than that right now. What's the big picture on crypto? I mean, we have the government buying into crypto, but there are a lot of other elements. Do you still love crypto? Let's start with that.
Of course I do. And I think institutional and retail investors are still deeply in love with crypto and also deeply interested in it. So the funny thing with our President Trump, is the 4D chess continues. What he loves to do is make a market rattling announcement on a Friday or on a Saturday, which kind of shakes confidence in markets. They close in the red, and then we have a gap down open on Monday. And that gives all invested parties and policymakers time to stew and think about what their options are and to make those phone calls over the weekend in order to move the ball into the direction that President Trump wants it to go to. So that's just his style of policy making. So what we saw with Bitcoin's consolidation from its all-time high, where we saw profit taking, we basically saw it turn into a sell-off after China resumed its tit-for-tat response to President Trump's global trade war, this time with export controls on rare earth minerals. And, actually the new policy announcement from China did little to impact Bitcoin in the short term. It was actually the threat from Trump's Truth Social account that kind of catalyzed this downside in equities and in crypto markets. Now, as you talk about with this US shutdown, and when does it end? It's not necessarily negatively impacting crypto markets. When the shutdown first started, we actually saw Bitcoin begin to rally, and the wider crypto market followed, which is typical. Bitcoin tends to do these asymmetrical price moves, which are unexpected when there's market volatility, right? Sometimes it's really variable. So, but what I think the actual government shutdown does do is it adds a bit of fear to the market. And while it may not lead to aggregate risking off in crypto, it does impact crypto traders' confidence to add new flow or to inject new capital into the market. And that's what we're missing right now, is sustainable, robust spot inflows, and the same also from the perpetual futures market. So that's one of the reasons why Bitcoin was not able to maintain its kind of like its mean price at 120,000, nor was it able to maintain its range highs around 126, 127,000.
Right. You know, what's interesting is that it did hit a high on day 8 of the government shutdown. So, it managed to climb the wall of worry and get up there, and people still see the store value part of this story as very lucrative going forward, and people are still buying into Bitcoin. You're seeing institutions doing the same. What's interesting here is a day like this where Bitcoin's down 3%, Ethereum down 6%, Solana's down about 4%. I guess a lot of folks may see this as a buying opportunity. I mean, even, things that are related to Bitcoin, MicroStrategy's down 3%, Coinbase down 7%. And now we've seen a lot of legislation that's been helpful for crypto, though I think the very latest, the CEO of Coinbase saying the latest legislation and policy proposals actually will stop the U.S. from becoming the crypto capital of the world because of the language in some of the latest proposals. But in the meantime, is it a go? I mean, do you buy Bitcoin? Gold is jumping is over $40 higher today. No one wants Bitcoin today.
Right. Well, without giving financial advice, because we always encourage investors to do their own research, right? That's critical. But without giving that financial advice, there are plenty of metrics and data that suggest that Bitcoin is trading at a discounted value right now. If you consider the mean price to be 120,000, then one standard deviation move away from that is 115K. A two standard deviation move away from the mean is 110K. And if I look at aggregate order book data for Bitcoin right now, we see a sufficient and hefty amount of bids in that range, right? If we look at liquidation heat map data from High Block Capital, which basically shows where are all the short positions and long positions across various order books at centralized crypto exchanges, we can see that there's a liquidity pocket of long positions which are being exploited right now. They're being liquidated, and that pocket extends all the way from 120K down to 115K, and then from 115K to 113K. So, Bitcoin has been a buy on the dip asset for basically since the spot ETFs were approved, and for investors looking for a little bit more data or information to kind of guide them in making that purchase. Also have a look at what IBIT's doing and what the spot Bitcoin ETFs are doing. They tend to also buy on these dips. So I do believe that that Bitcoin is trading at a discounted valuation right now, as does JP Morgan, who recently did some analysis where they looked at the Bitcoin to gold ratio and showed that Bitcoin is undervalued, and the amount of risk capital flowing into Bitcoin now versus gold is actually higher, and that Bitcoin's true valuation should be around 166,000, if I recall correctly.
That's actually really interesting. Let me ask you this. What's the catalyst? Is it going to be some sort of legislation? Is it going to be when the markets are back, risk on? What's the next leg up for Bitcoin? Sometimes the halving, which happens every 4 years, I believe, that's not coming up very soon. But, that kind of thing can be a catalyst for Bitcoin to move higher. Is there anything that may give it a kick higher that you're waiting on, for example, in the next 1 to 6 months to help Bitcoin and crypto move higher?
I think Wall Street, the smart money, institutional investors, they're waiting on these market structure bills to get through the Senate. The Republicans have the majority across government, so it's just a matter of making it happen. So I think that that's the primary catalyst that will basically lure large flow back into the market. Beyond the regulatory kind of delay that we're seeing, and that's extended by this government shutdown, a more macro and global catalyst behind Bitcoin's bid and what would make it go higher is kind of the realization that monetary policy is shifting, right? At the Fed and at central banks across the world, they're shifting into a more easy money, expansionary regime where interest rates will continue to be cut and accelerated money creation is used to refinance debt or fund bloated government projects or entitlement guarantees. And, cutting interest rates is also designed to kind of revive consumer confidence. So I believe, and I think institutional investors believe, that dropping benchmark rates, they will eventually have an impact on fixed asset yields. And when adjusted for inflation, profit margins and compound returns shrink. And Bitcoin kind of stands counter to that. It's just a better investment. So that's probably the catalyst. Another 50 BPS to 75 BPS in interest rate cuts, and then closing up Q4 profitably and moving into Q1, where institutions rebalance and reallocate into the market. The forward prospectus is very positive. So I think that's basically what we're looking for.
Thank you, Ray, so much. Ray Salmond, head of markets at Cointelegraph. Thanks for joining us on the show. Really appreciate it.